A broad risk-on session is underway, and the macro backdrop is worth understanding in detail. Welcome to MTRS_Market Pulse. Here is your India market briefing for June 27th. We cover the Nifty 50, Sensex, Bank Nifty, and the stocks dominating headlines today. Let us start with a snapshot of the Indian equity markets today. Starting with the Nifty 50, India's benchmark large-cap index. Nifty 50 is broadly flat at 24,056 Indian rupees, awaiting a fresh catalyst. Equity markets are responding to reports that tech stocks drive unnerving sell-off in global markets, The New York Times. Nifty 50 is in a consolidation phase, a pattern that can precede a significant directional break. Watch the $24,537 resistance and $23,575 support as the boundaries of the current range. The Sensex, tracking India's 30 largest blue-chip companies. Sensex is broadly flat at 77,100 Indian rupees, awaiting a fresh catalyst. Equity markets are responding to reports that tech stocks drive unnerving sell-off in global markets, The New York Times. The Bank Nifty, India's banking sector barometer, is closely watched by traders as a leading indicator for the broader market. Bank Nifty is little changed, hovering near 58,177 Indian rupees. Equity markets are responding to reports that U.S. House Democrat, who may soon run key committee, condemns crypto in 401(k)s. With Bank Nifty moving sideways today, the market is effectively waiting for a fresh catalyst. The $59,631 level above and $56,723 below are the levels to monitor for the next directional signal. Now let us look at the stocks making headlines in India today. TCS is trading lower by -0.62%, at 2,095.90 Indian rupees. The 26 to 28% EBIT margin band has been consistently delivered. The market wants to see whether AI-driven productivity allows margin expansion beyond the upper end of that range. Attrition stabilization is a positive signal on demand confidence. AI services deal conversions are the emerging growth driver. SBI is up plus 1.02%, trading at 1,045.20 Indian rupees. The Yono digital banking platform is building a retail liability moat. Corporate loan book quality, the historical weak spot, is now at decade-best levels. The dividend policy has become more generous. Watch for any RBI guidance on priority sector lending norms that could affect cost ratios. ICICI Bank edged higher plus 0.98% to 1,387 Indian rupees. Retail loan growth, mortgages, personal loans, credit cards is compounding strongly. The digital banking platform has dramatically reduced customer acquisition cost, giving ICICI a structural margin advantage. Asset quality remains the cleanest among large Indian banks. Any NPA deterioration would be the key risk signal. Now let us look at the macro backdrop for Indian markets. The rupee is strengthening against the dollar, trading at 94.30. A softer rupee compresses margins for import-heavy sectors like oil, consumer goods, and airlines, while IT exporters like TCS and Infosys benefit. Investor sentiment is being shaped by oil nears pre-war levels, but a top economist warns lower prices could mean higher inflation, Business Insider. Foreign institutional investor flows are the near-term swing factor. Any risk-off in global markets tends to amplify selling pressure on Indian indices given the high FII ownership in Nifty 50 constituents. The biggest mover in India today is SBI. SBI is up plus 1.02%, trading at 1,045.20 Indian rupees. Return on equity improvement, now approaching 15%, is the re-rating story that has driven the stock higher. Government infrastructure capex lending is a low-risk, high-volume growth engine. Any NPA reversal or write-back announcement would be a positive. Here is what we will be watching closely in the days ahead. Keep a close eye on central bank speakers and rate commentary, and key economic data releases. Any one of these could be the catalyst that defines the next major directional move. We do the research so you do not have to hours of analysis distilled into actionable daily briefings. If that is valuable, please hit the like button. It is the single best way to support independent market analysis and help us reach more investors. Subscribe and turn on notifications for tomorrow's briefing. Drop your view in the comments. Are you bullish or bearish from here? Thanks for watching MTRS_Market Pulse. Nothing here constitutes financial advice. Please conduct your own due diligence. Good luck in the markets, and we will see you in the next video. That is your India market briefing from MTRS_Market Pulse. Subscribe for daily coverage of Indian and global markets.